Hello again and welcome back to a rather grey and drizzly London. Anyway, let's crack on with the latest news. Bernanke has finally given his press conference and we now know that the Fed is likely to begin tapering its QE this year if the economic conditions allow, and it could be totally phased out next year. I've been getting the views of Craig Erlam from Alpari. Craig, so we've been talking about this for months, weeks now. What's Bernanke going to do? What's the Fed going to do? But now we seem to have a pretty good idea that there's going to be tapering this year and then a total wind down by 2014. What did you make of what he had to say?
Well, I think the interesting thing is, as you say, usually we do get these little hints and comments which suggest one thing or another. Last month it was Bernanke saying, well, we could see some tapering over the next few months, which created some bit of a stir in the markets. But I think the surprising thing about yesterday was it was so clear. It was black and white. We will probably have tapering later this year as long as it's in line with the projections. It will probably come to an end in the middle of next year. So he was very, very clear on every point he was making, which was quite unusual for Bernanke. But I think one of the strange things about the whole thing was the fact that we saw that such a major sell-off in the markets. I mean, while it's first time we've actually heard it from the horse's mouth, as it were, we've not actually necessarily not learned anything which we weren't already assuming anyway. Everyone in the markets was already assuming it would probably be the end of the year. Maybe September, more likely December. That's not changed. It was always going to be dependent on the data, which is what Bernanke said yesterday. So I don't really think too much has necessarily changed, which is why I think that major sell-off which we've seen in the equity markets, the sell-off in the bond markets and the rally in the dollar, I think it's a bit of an overreaction at this stage, and I think we are going to probably see some form of correction in the coming weeks.
Yeah, you just made a really good point before we started filming that everyone's so focused on this one event that we seem to be forgetting about other events, saying there's been good data out today which has been just totally ignored.
Yeah, and it just goes to show the fact that all this talk over the last few months that it wasn't necessarily just the Fed that was driving the markets higher, the fact that it wasn't unsustainable, the fact that there were reasons why the companies were performing better, the fact that they had higher amounts of capital, this, that and the other. It just shows that it was nonsense. I mean, the first sign that we've got that QE is going to be tapered, the first sign that we've actually got that it could come to an end in the middle of the next year, and everyone panics, they get out the markets, they become risk averse and they start selling. And I think this just really does show what is driving these markets. I mean, we've had some fantastic data out today. We've had brilliant PMIs out the Eurozone, the retail sales in the UK, completely overlooked. There was a minor reaction, I think, in the cable, maybe a minor reaction as well in the euro dollar, but it was only half an hour later, and all of a sudden we were back at those daily lows. So it really does show what has been driving these markets recently.
But we should be clear, shouldn't we, about this announcement by Bernanke or his speech, that this is a good thing, isn't it? It shows that the US economy is getting back on its feet, it's creating jobs, yet the markets aren't really taking it that way.
Well, it depends what piece of data you look at. You can look at the unemployment rate and see that it's coming down, but then you can look at other things like the participation rate. Now, if the fact that the unemployment rate is coming down looks good on paper, but when you take into consideration that there's been, say, a 2% drop in the participation rate for 25 to 55-year-olds, these are meant to be like peak working ages, and there's been a 2% drop, suggests that maybe this isn't necessarily telling the whole story. And the fact that the average non-farm payroll figure is below 200,000, which many economists believe is below the amount which is needed to legitimately bring down that unemployment rate in a sustainable way. And also the fact that, say, a lot more people are in part-time work than want to be, but obviously this figure helps make this unemployment figure look a lot better. So it depends what piece of data you really look at as to whether the economy is actually improving, and that's why, well, for me, I think it's too early for the Fed to taper, and for me personally, I think it's going to be December at the very earliest before we see it.
Just to finish off, where's the money going? We've seen gold and silver sell off, we're seeing equities sell off. The traditional safe havens before in the currency markets like the yen and Swiss franc aren't necessarily the right options anymore. So where is the money going in a global context?
Well, I think today, what we're seeing is essentially just people waiting on the sidelines. I mean, we're seeing obviously a lot of money in the dollar. I think the dollar rallied about 200 pips against sterling, against the yen shortly after the announcement as well. So obviously the normal safe havens aren't seen. I think we saw bonds sell off as well. The US Treasuries obviously sell off. So I don't think the normal safe havens. I think this is more a case of investors are pulling out the markets, almost waiting on the sidelines, waiting to see what happens next. Because I think there's still almost a lot more uncertainty uncertainty. You've got the certainty surrounding what the Fed are going to do or how they're going to approach this. You've got the certainty around the fact that they're looking at tapering towards the end of this year, potentially with an end in the middle of next year. But I think there's a lot of uncertainty in the markets as to how the market reacts to this. Do the markets think we're going to see tapering in September? Is it going to be December? Do they actually think that the US economy is going to perform as well as the Federal Reserve have forecast? So I think there's still a lot of unanswered questions, despite the fact that, like I say, Ben Bernanke has been as open as he's actually been in any of the previous Fed press conferences.
Well, it's always great to catch up with Craig from Alpari. He's got some really good insights into the markets. Coming up on Dukascopy TV, there are more interviews, including with Miles Eakers from Savvy Trading. I'll be speaking to him about the trading implications of Ben Bernanke's announcement. But for now, goodbye.